Hey everyone, I'm Jim Tay and today we're coming to the end of 2021 and I want to give you an update on the latest Singapore property market. This time I'll be going in depth into certain graphs and charts that will be able to shed insight on how the Singapore property market is doing at any point of time. Well, like this video, hit the subscribe button if you've not yet done so, helps me a lot. So this video, please watch till the end. I will be explaining many of the charts and graphs that will help explain many things. If it's 2022 or even beyond when you're watching this, don't worry, just head to the link in the YouTube description below. I will have a link to my website where I will have all the updated data, charts and graphs there. Without further ado, make sure you keep watching. First of all, let's have an overall idea of the current Singapore property prices by looking at the property price index, courtesy of SRX. Very helpful portal for a lot of statistical data. And two key periods that I want you to see. The first is TDSR, which happened in July 2013. So that's Q3 2013. You'll notice that since TDSR came into effect, there was a gradual downtrend of the property price index. Okay. Then in March 2017, there was some relaxing of the measures. And then the next key period you need to know is in July 2018, where we have the once again tightening of measures with the increase of additional buyer stamp duty and the lowering of the loan to value. With that in mind, the first chart I want to bring your attention to is the comparison between market segments. This is a very important comparative chart that actually graphs the price index of these three segments and show how they compare with each other. Let's take a look. So the red line here is the CCR, the dark blue is the RCR, and in orange you have the OCR. If I draw a line to show when the TDSR happened in 2013, you'll see that all three segments had a downtrend in price. However, you'll find that since then, CCR has had a rebound. However, it's clearly seen that OCR and RCR has had the highest rebound in price relatively to the prices that they had back in 2013 or even back in around the late 2000s when their price index was more or less similar. Well, the reason for this is because, of course, OCR and RCR, they started off with a relatively lower base compared to CCR. Hence, the price increases had a more significant difference in the price index because, of course, price index changes is always relative to what the price was at the beginning. As you can see, the index was at 100 around 2008. Okay? But what we can take from this is that CCR, since 2013, okay, till today, the price has yet to exceed its 2013 high. Whereas for RCR and OCR, you clearly have seen that prices have shot up way above what it was in 2013. Could this potentially mean that now in 2021, the opportunity lies more in core central region properties where prices are actually still relatively the same compared to its 2013 highs? Whereas for RCR and OCR regions, the prices have grown quite significantly compared to 2013 levels. The next comparison I want to show you is to actually answer the question of whether Singapore homes are indeed becoming more unaffordable. This data taken from the Ministry of Manpower MOM as well as SingStat. You can see the orange line is the median household income. I've all reverted them to 100 base so that they can be easily compared to each other. You'll see that since November 2013, you can see that our median household incomes actually increased gradually only to 2020 when there was a drop, probably due to the COVID-19 situation. At the same time, you'll see that in 2013, again, where TDSR was implemented, in fact, the property price indexes dropped. Grey line is the private property non-landed, whereas blue line is the HDB index. Only in late 2017 did the private non-landed increase. Okay. However, from this chart, I would think that the more significant and the worrying increase is the increase for the HDB market, but you can see since late 2020, the price has gone up. The index has rose even higher than the private property index, relatively speaking. Should therefore our incomes not go higher anymore, and instead the HDB prices continue to uptrend, causing them to meet somewhere here? Then that is truly a scenario that I believe our government would not want, and hence cooling measures would definitely be coming in. So I think this is a good chart to see the affordability, and what our government doesn't want is really for incomes not to be growing, and yet the price index is still growing. As you have seen previously, the gap between our income growth and the property growth is still something very reasonable and acceptable to our Singapore government. Back in 2018, they stepped in because there was a sudden spike in the private index. However, that helped to maintain its price only till recently. So it really depends to see how income growths continue, whether in 2021 we actually spike back up ahead of 2020 levels. If so, then I do not think that actually cooling measures would be coming to Singapore anytime soon. Continuing on the topic of whether cooling measures are coming, here's another graph that will show you whether the market is really heating up. It's a market segment quarter-on-quarter price index change. Again, this data is taken from URA. You'll see that back then, before TDSR, I will always reference to TDSR here, the price was constantly in a positive growth territory. Hence, the market had to be cooled down before it continued to speed up further. But since TDSR came in, you'll see segment 2 over here, prices has been on a negative downtrend as evidenced by the falling property price index during the period from 2013 to 2017. Then there was a major spike over here. Okay, you can see clearly every segment of the market, besides for the blue line, which is the HDB, was having growths of between 4 to 6% per quarter. This is something that's really alarming to the Singapore government, and hence they immediately stepped in with a new set of cooling measures in July of 2018. However, since then, despite everything you hear in the market about property prices going up, defying COVID, you'll see that the quarter-on-quarter price index increases have not exceeded 4%. Okay, and it has been accompanied by ups and downs. Okay, it's not consistently growing, nor is it consistently falling. And I think part of the reason for that is because the government's measures in controlling COVID-19 actually act as natural cooling measures for Singapore property. So whenever they implement some new rules, like for example the circuit breaker or the heightened alert, the property prices tend to grow slowly or even enter into a negative PPI territory. However, when they release the market, then it goes back up, as you can see very clearly from here. And it's not the same across all segments as well. Both CCR and the RCR region has had its good shares of its ups and downs. Whereas for OCR, the orange line, it mostly still had positive growth during the entire period from 2017 till today. One thing that you can see again very clearly from this graph is a sector which is most at risk. Look at the blue line. Once again, this is the HDB flats that's growing at about 3% per quarter recently. This ties back again to the previous chart where I show that if the HDB price trends continues up, especially over the next 1 to 2 quarters, I'm pretty certain here is an area where the government would have to step in. I think the recent premium location housing plan, the PLH, goes a little way to curbing the market. However, that is more long term. I think right now, because of the delays in construction and people not getting their homes on time, sellers are asking for higher prices and valuations are also catching up. If incomes do not catch up, or if price growth continues at around 3 to 4% per quarter, let's look at this coming quarter, we see whether the government would step in the HDB market. So sellers, if you're looking to sell, I think it's a good time to actually try to push out soon rather than later. The fourth graph I want to show you is something that would help to explain to you why, even in this period of COVID uncertainty where there's a lockdown, why yet are our property sales so strong. Here's what I've compiled for you to see. It's fascinating to see the amount of cash liquidity that Singapore households have. This is a graph called net cash, which is cash and deposits less liabilities. And liabilities in this sense include your housing loan, your car loan, and any personal loans. You'll see that there has been an astounding increase in the net liquidity position that Singapore households have since 2016 second quarter, the last time it was in negative position. So even throughout the pandemic in 2019, 2020, 2021, we have seen a even sharper increase. This shows the amount of funds that are flowing into Singapore and the amount of surplus liquidity that Singapore households have. I hope this useful insights to show you that with this amount of liquidity, all the available Singapore properties can easily be snapped up, including ABSD. So that's how rich households in our countries are. So if you're a bargain hunter in the market looking out for fire sales, look at this chart and you'll realize why they are so difficult to find. That's because everyone is flush with liquidity and there's so much in the market to keep things buoyant and to keep prices chugging along, and no one really has a need to fire sale property, especially with all the cooling measures that are in the market today. Any property purchase made is done with a lot of due diligence, hence reducing the need for any unforeseen circumstances or fire sales. Finally, the last graph that I want to show you is to actually investigate whether certain claims made in the market are true. Think, we may have heard, especially during the 2018 time where there was a lot of new launches in the market from the en bloc period in the 2016-2017. So there were many en bloc units in the market. I recall there was a lot of fears over oversupply. Back then, there was some sales pitches in the market that went something like this. In economics, demand and supply determine the price in the market. So right now, supply is high. So this is a period where price should be low. So if you buy now, there's a high possibility of its price appreciating when supply drops in future. So buy when supply is low. So because I wanted to investigate this myself, I've created a chart that plots the property price index against the number of private residential units launched in a quarter. So let's take a look to investigate whether buying when supply is high is a good idea when it comes to property price appreciation. Let's look at the points where supply was the highest. Here, okay, this was in Q1 2012, and also here where it's 209 Q3. So when we look at these two data points, I will say that it tells very conflicting stories. So back in 2009 Q3, yes, if you bought here, it is the right time because the property prices flew after that. However, if you bought when supply was high in 2012, you would be in trouble because soon after the TDSR came in and property prices started to fall. If you look further back to the early 2000s when there were not as many cooling measures in the market, you'll see that the price trend went up till the 2008 global financial crisis, and it was also associated with an uptrend in the property units launch. So when prices were low, units launch were also low. When prices were high, units launch were also on the high side. And if you look more recently following TDSR, you'll see that prices fell, supply also fell. And in fact, if you wanted to time the market to come in before the recent spike in the property price index, you'll find that supply during this period is actually the lowest. Now, what does this tell you? I think the data is inconclusive, and you can't really say that when supply is high, it's a good time to buy, nor can you say that when supply is low, it's a good time to sell, because the data clearly shows otherwise. So that's it for this video. I hope that the 5 last charts and comparisons are useful for you in helping you have a clear understanding on what the Singapore property market is like. And no worries if you can't see the pictures clearly or my scribbles get in the way. The link to my website is in the description below, and over there you can see the latest updates of these 5 charts as well as any new information that I've decided to add along the way. Do leave a comment and let me know what you think of my video, and if you have any additional things to add on the data I've shared or any counter objections or thoughts you'd like to input to help all the viewers here. Once again, my name is Jim Tay. Please give me a like, a thumbs up, helps me a lot. Hit the subscribe button, motivates me, and I'll create more good content for you. See you next time.